Insights. I'm Eric. Thanks for stopping by. We're going to talk about corn, soybeans, and wheat, three markets that really have been pounded. And these are markets which I've talked about in the updates of the individual reports that shouldn't be a surprise that they have come down. In massive energy builds that have taken place prior to this. You can go read any of those reports. The wheat was the leadership energy build. It was extremely bearish. I would say it was massive in size. It has come up at 0, -8 and -59. The DI2 at -59 reflects how big the energy build was for so long. In terms of the energy build, you can see wheat, soybeans, and then in corn in that order are the more negative ones, and corn is the more bullish. But as I've also said in many of the reports, particularly wheat, since it was the leadership group, that where goes the leadership group, such as wheat, the other ones will follow. So when they flushed wheat, it was only a matter of time before they flushed the other three. And when I say flush, this is a weak to strong hands transfer. This is where they, scream out loud, and beat the pots and pans to get everything that's lurking inside the whatever you want to call it, the cornfield, wheat field, get them to move, herd them around, move them around. The weak hands are a skittish group that's largely controlled by the headlines, the reports, government reports, and unfortunately, much of social media is really the weak hands. It is the majority. They push them around. They are vulnerable. The whole point of having the matrix is to know when a market is extremely unbalanced. When it's unbalanced and you have exceptionally extended cycles, whether they be daily, in the case of the grain markets, they were all across the weekly time frame. We could take a look at even the weekly trend now. You can see that everything that was extended in red right in these columns has disappeared as they have flipped this, the secondary trend. This is down. This is a breakout. These are going to start counts to the downside. This market is in consolidation. Why is it not a bear market? Because the primary trends are still up. I see everyone's racing to change their calls to say that the top is in or that we now are ready for a bear market. But unfortunately, there is no confirmation for that yet. Perhaps it comes later. I'd be careful assuming that that's what you're going to see. It's widely planted in the headlines that a recession is going to take down inflation. It's going to take down this commodity sector because it's a driver of inflation. But I caution against all of that. This market is much different than what it appears to be. The invisible hand is setting up for a transfer of the core economy that's going to take place in the next two cycles towards the end of the decade. Commodities is reflecting the move there, and the move in the dollar market in particular reflects what's taking place behind the scenes. Everyone who's watching this should be participating in the US dollar index report. We talk about that in terms of being one of the more important reports, the dollar index, and I don't want to make this a focus of this review, but unfortunately all markets are interconnected within the matrix and in the world. And you can't get away with this isolated perspective that I'm going to study these markets in terms of domestic production or something. It just doesn't work like that. There is more going on. The US dollar index reflects that. I can see in the discussions that take place in social media, even the people that are out there patting themselves on the back and giving their own accolades and thank God everyone's publishing their information for free kind of stuff, they don't understand what's taking place. What's taking place is a transfer of the world's empire to another portion of the globe, and it's having an effect on all sorts of markets, primarily the currency markets, but it's filtering down into the commodity markets as well. Now, the dollar market can rally and the euro can collapse, and that's bullish for the dollar. And then everyone says, well, that's going to be bearish for commodities. Not necessarily. It depends on where confidence lies within the cycle. It depends on where the supply chain. There's all sorts of things that factor in. So instead of like pontificating or hypothesizing what's going to take place, all we should do is follow the primary trend and follow the evolution of the trade, which is right here. Subscribe to the matrix. You get this link. I'd study it. There's a bunch of videos in there as well. You can watch things like this to help you understand where we're moving through. The corn and soybeans and wheat market, a lot of them are primary trend decline 1 and 2, but that doesn't mean it's over. There's longer term cycles here in play. This matrix views these markets through 1959, which is pretty far. These markets go a lot further than that. They go back into the early 1800s. Soybeans are less and not quite as far back as the rest, but it does alter the way the market's set up. Primary trend decline is the end phase within a life cycle. These markets have been up from 21 to 23 months, and everyone says, well, okay, it's primary trend decline, therefore we want to look to get out. But they're not as extended as they look. Some of these price cycles have come down. Now these time cycles, they're adjusted, and oftentimes they're adjusted much lower for a longer term database that accounts for things that taken place long before 1959. And trust me, if you have a database that goes back to 1959, you're not going to understand any type of shift that's taking place. Capital flows, the shift in the core economy, the shift in the empire that's taking place. You're just not going to catch that with too short of a database. Even my database, which doesn't go back, it doesn't go back into the 1500s. It does for gold and silver, but not for these commodity markets. It's tough to pick up everything, but trust me, going back to 1800, it's going to pick up a lot more than it's going to pick up through 1959. And I know that you point this stuff out, and you point it out to the majority, which is oftentimes out on the internet, and they get all upset, and they want to call their tops, and they want to say it is over. But I'd caution against a lot of that. The primary trends of these markets are still up. If we take a look at even at wheat, and we'll take some short, I'm going to go into further detail in these markets, especially in the individual reports. So I don't want to go and talk about it too much. You can see that we are heading lower. And I said, and even a sharp reaction, you can take the primary trend, you can knock it down, but this is through 1959, and it can head lower, and you can have a slight break. And I can see if I can pull up a longer term chart, and I have to open up one more database, which I normally don't do in these types of reviews. These are the things that we study in reports, but we're going to address them real quick, and I just want to pull out the long-term wheat one in particular, and we're going to take a look at that chart. And if we study wheat in terms of that, you can see that this move here, this green box, of which we're falling back down, it's not as big as it looks in terms of both the height, and you can see that the different colored heights, it's not very wide, it's not very tall. This rally is impressive, but it's not impressive like we've seen in the past. And you could get a small break inside the box, which often happens. And I'm going to zoom into one of them to talk about that, where the market has a sharp run up, and then we see a green box, pretty tall. Looks like it's over. I want to call it over. Then we have an intervening non-shaded area, and then it takes off and sets new highs again. This is a real possibility in a market where the supply chain is broken, in a market that's headed back, and I'm going to close this out, that a market that's headed back towards what looks like towards a reversion to the mean, and everything's going to go back to normal, but then it continues on higher. And it is a market that we can see some odd things because of, again, what's taking place in the euro, what's taking place in the British pound, what's taking place in the dollar. And then you can't factor all that out and say, just tell me what I need to know in terms of wheat, soybeans, and corn. It just doesn't work like that. I mean, these markets do trade in isolation, but if you get a completely domestic focus, you will get burned, and you will get burned based on what else is taking place, not only in the U.S., which we say domestic because that's what we're focused largely on, but that's not true because the matrix looks at capital flows that are taking place all over the world. And again, another point that we're seeing as we see the markets panic is how money is going to rotate in the bond market. And I would say not so fast. I mean, I would not make that assumption. And there's ways we're going to talk about it, and perhaps we'll do a treasury bond update or report or review of some sort to discuss that. But the market, again, is just not there. And anyone who has domestic only analysis is going to get burned if they do not understand the long-term cycles and then the energy builds that are taking place that do not support what they're talking about. Anyone who talks about markets without understanding energy builds is really just selling a narrative. Narratives are quite profitable. That's commodities to the moon or commodities into the cellar or vice versa. And I've seen, I've seen them talk about that in terms of Bitcoin. Bitcoin is really symptomatic of that type of discussion. There's really no discipline in these markets, and you can't say that you're going to take the discipline out of the commodity markets and out of the grain markets at this point. So where do we go from here after the markets fell? And I mean, they fell sharply, and I'm going to pull up a few, but I'm not going to talk about them specifically. We'll have to address them in individual reports. But if I look at the pro charts in particular, and we'll study wheat or take a look at wheat. And this is not a weak focus. It's just that wheat is the leadership market, and therefore we tend to focus on the leader. If you click this link inside the matrix, you're going to see the pro charts. And here's the pro charts. Here's the public chart. Here's the pro chart. And here's wheat. Shorter term, but you can see the amount of selling that took place. Public still buying, professionals sell. And when it broke the ice right here, this is when everything fell apart. And that is what the warning took place. And I've said when market, anybody who's watched any of the wheat report updates, we gave very specific lines in the sand that if it broke, you would have to expect the onset of consolidation. Not only was it going into daily, but would likely take out the weekly trend from up to down. These are all good things longer term, especially when another reset is due. But then right now, no one feels a reset's going to take place, and it's going to be straight down the elevator shaft. And this is all we're seeing. But professionals anticipated, and it was selling hard. Public is not selling. That's usually still a warning. Public is stupidly buying. The public is a bunch of fools. For them, we're not talking about an individual group. It's just the type of buying strategies that they use. This is the weak hands. These are the strong hands. And again, it's just like energy. We're looking to find out who's doing the buying and selling. And for now, we're still seeing a lot of professional selling, and that's going to have to slow down a bit. If we continue lower, and you have to be careful, everything has come down from triple digits into double digits, and I know everyone's thinking these things are going to go to zero, but you are pushing against enormous cycles now here. 2 standard deviations, 2 standard deviations, 6 standard deviations, nearly 7 on the price cycle. I mean, again, you do not have to know what in the hell is going on in these markets to recognize that this is a daily cycle that's phenomenal. This is too far, too fast. So you're going to get some type of reaction. But in time, you're going to need to build these energy builds from much higher levels. The 59 is encouraging in corn, and I suspect when we come to Friday's energy builds, these are going to skyrocket. Not only are these going to skyrocket, the DI2 is going to push higher, but we have to get these above zero, and only one of them's close. And that means weeks and weeks of maintaining an energy build, especially with this much damage. And that's what takes place. If we say, well, what are we looking at? What do these energies visually look like? And that's a good question. We talk about these in reviews as well as the reports, and reports in much greater detail. Let's pull up one of them and just take a look. We're going to use wheat again because, again, it's the leader. So we pull this up, we can see this market, a massive energy build way down here. Many weeks below 60, almost reached 100. Then it pulled DI2 down, and DI2 was as low as minus 60 some. That's a big energy build. That's that yellow line. You can see how low it is. Now we're shooting higher. We're scooting higher as price collapsed. This was the warning. When this coincided with weekly cycles that were near 4 standard deviations, I was saying take profits, do something, be careful, be prepared. Be prepared for falling down the elevator shaft, because these weekly price and mostly time cycles were unbelievable. This was due for a pause, and they knew it, and they were going to target it. And now, and I'll take this off, and now we're going to enter a weekly time frame where it's pulling down. If it stays down long enough, perhaps it will pull down the monthly. Will that be the end? Well, I can say the only way that's going to be the end is if these energy builds are bearish rather than bullish. But they're already starting to go well above zero in a couple cases, and wheat, I suspect, will pull up very quickly as well. It's difficult to start a bear market when you have an energy build that's when you have an energy builds that are really bullish, just like some of the models that we were talking about in the NASDAQ, where the NASDAQ had some concerns of a primary trend flip, but then the equity DI, which is down here for the entire composite, is extremely bullish. Yeah, you're going to push on that string lower. When you're pushing on a string, it's kind of a futile effort. That will be the same thing if the commodity markets and the grain market actually say they're going to flip down and they're going to break the ice. Well, they got a massive energy build that's going in the opposite direction. Good luck with that. And then what happens? Well, you get that small sliver, intervening sliver, and then it slingshots in the opposite direction. These are concepts that we're going to address in the reports in the coming weeks and months. This is just a review to tell everyone this is not something that should have been unexpected. We also talked about in the wheat report that when we fell down to the weekly gaps, that 792 would probably be the target or the target for the sell. We also talked about some geometric forces that had targets of 9 and 7. This is all what it's played out to be. The problem is it's going to be difficult to get to 792 at this point because we head back. Why? Because this is almost a 7 standard deviation price cycle. 7 standard deviations of what? It's because we've had such a big profit. It's reached the wheat has reached 33%. It's a maximum reading into the decline. Yeah, it's again, you're pushing on a string. This could be the bottom for wheat. But the thing is, the bottom in price only. It's going to take time. In terms of the evolution of the trade, we're going to have to wait for the daily from that it's currently down to turn back up. And then we're going to have to wait for the weekly, which is currently down, to stabilize and to turn back up. And then what you'll get is you'll get a reset from down to up, from down to up, and you'll have a reset where you have triple alignment. You'll have up, up, and then as we slide across, the most important is the monthly trend. It will be up. That will generate a reset, and then we'll see a composite score will be much lower, much more favorable reset to enter this market. When everybody was trying to push the wheat market or corn or other things, when these markets were so extended in terms of all sorts of cycles, the computer wouldn't allow it. It was not recognizing the resets to say stay away. Perhaps it'll recognize this one because maybe at this time, instead of getting a late cycle reset, we'll get a mid cycle. I doubt we'll get an early cycle. It's possible, but it's going to get a little bit more difficult as the monthly trends get more mature. But it could definitely be an early cycle flip if these flip down over a very short period of time and then flip back up into an overall slingshot. What is a slingshot of event? It's when the price falls down an elevator shaft, and it does so pretty quickly and pretty aggressively. And it knocks all the composite trend, which is a function of the daily, weekly, and monthly directional, whether they're currently down, down, and up. And when it knocks them all out of alignment, or it knocks them all back down, but then it generates a massive energy build in the opposite direction. And then everyone goes, all the weak hands that were bullish turn bearish, and the smartest money on the planet, which is the invisible hand, is saying, I'm bullish, and it slingshots in the opposite direction. It's kind of like an orbit where, if I move the cursor, goes around a planet, uses gravity to slingshot in the opposite direction, and it takes off at a greater speed using gravity to accelerate and to achieve a new orbit, or actually to achieve a new directional change, and it allows spacecraft and probes to travel throughout the solar system without a lot of an internal, without too much internal energy in an engine, by using the gravitational forces that exist within our solar system. The slingshot effect will take place in the grain market if we have an energy build that's opposing a lot of these directional changes. It is something that we're going to have to keep an eye on. So that's really what I wanted to talk about. You can watch some of the report updates. We have report updates or reports for corn, soybeans, and wheat. Eventually, they're going to expire, and we'll probably generate new ones because these are pretty important markets and there's a lot of interest in them. But that's where we stand. We're going to keep this one open up. So if anyone has any questions, let us know. If you're new to all this stuff, talk to us. We'll probably help you out, but you can't help yourself out if you're listening to the internet or headlines or even social media to any extent. It's bad information, and that's all I can say. I mean, I know they congratulate themselves left and right on how good everyone's doing, but I've never seen such lack of discipline that exists. Wall Street's got terrible discipline. The headlines do not encourage it. But Wall Street's smart. They're encouraging that lack of discipline in order to play you against yourself. You are the mark in the poker game. If you don't know it, you probably are. It exists in the trading and investment game all the time. The corn market is creating a lot of marks right now. That energy build, which is fairly modest right now, it is going in the opposite direction of what everyone's feeling. It's not to the point where it's so big it's undeniable. It will get unbelievably big if this is going to slingshot the market. We'll warn about it, we'll scream about it, we'll talk about it. People will probably say, hey, it doesn't matter, you're wrong, it's different this time. The invisible hand is hardly ever wrong. It does get things wrong a little bit, but it's usually based on shorter term timing. If it doesn't yield and doesn't relent in time, a large bullish energy build will have its ultimate of effect, and that will probably to create the bag holders in the public sector. If that includes anyone who's listening to this, that's what the whole point of this is, to try and prevent that from happening. This is not just happening in the grain market, it's happening in all sorts of markets. We can see it taking place in cotton. We can see it. We haven't seen it take place in Bitcoin. These are, and maybe it takes place in silver and gold. It's hard to say. There are energy builds that are moving against everything that's taking place as well. Something is coming down the line, and trust me, the headlines or anyone, social media is not going to pick up on it and talk about before it happens. The only way you get any type of insight, any type of glimpse into the future, is you learn to study things like energy, to find out what the smart players are doing, what the invisible hand is doing. That is your only shot. And don't waste your time trying to find explanations on how it's going to affect the reports. And in the end, a smart trader once said, the fundamentals do not matter. When you come to watch this stuff, you will soon see, yes, I agree with that. Why did the price of wheat and soybeans and corn collapse? Fundamentals are exceptionally bullish, but I warn people that these energy builds and then these cycles were very dangerous and something that you had to either be prepared for or take profits or hedge or do whatever you're doing. And then when it happens, it's like, oh, well, fundamentals failed us. Fundamentals don't matter. You can tell yourself that they matter, but you're probably looking at the wrong fundamentals. That's the problem. And there lies the conundrum, I guess. And that teaches a lot of people. It also buries a lot of people. So these are the things that we're going to work on. This is what the matrix is all about. This is what reviews and reports are all about. If you're new to all this, we're working on it and we're maintaining them. We're going to try and update these grain reports when the time is necessary. We're seeing some of the energy builds. Perhaps after Friday, we'll have something more to talk about. But that's where we stand. Thanks for watching. And thanks for coming by. And thanks for your interest. And keep a consideration of what the Matrix can do for you.